Westfield has scraped by the narrowest of margins to approve the $70 billion split of its international and local assets. I'm joined by Steve Bartholomeus from Business Spectator. Steve, what does that mean now for Westfield?
It means that it's a much simpler path to the reconstruction of the Lowy empire than appeared to be the case 2 weeks ago when the original proposal to hive off the Australasian assets and operations of Westfield from, as you say, the international business would have been defeated had the vote been completed. At the time, I think the for vote was 74.1%, so short of the 75% approval threshold. Today, they got 76%. So yes, you're right, it's narrowest of margins, but it's got the tick. So instead of having to go to the plan B that Frank Lowy outlined after staring defeat in the face, which was to create two Australasian vehicles, so competing for capital, owning the same malls, one operating those malls for the other, would have been very messy. That was the kind of the loaded gun being pointed at Westfield Retail Trust security holders. So instead of that happening, we've now got a much simpler and, I've got to say, strategically quite compelling separation.
So it's much better news for shareholders?
Absolutely.
In what way?
Had today's vote gone against Westfield, we would have had these two competing vehicles containing exactly the same assets, one of which would be managing the other, one of which would have more upside than the other, and that's a really messy outcome and wouldn't necessarily have been a good outcome for Westfield Retail Trust security holders. Neither would have been a perfect outcome for Westfield. So you put the two things together, you've got common ownership of the same shopping centres, underlying shopping centres, you've got internalised management, there's more upside, and arguments about the value of the operating platform and the rest. Even in the first meeting, almost 3/4 of the security holders wanted this thing to go ahead. I think everyone who's looked at this deal says strategically it makes a lot of sense because the international assets have got a much bigger development flavour to them, much riskier, potentially a lot of upside, and are much more highly valued by Northern Hemisphere investors than Southern Hemisphere investors. The Australian assets are a very high quality portfolio, a large portfolio of shopping centres, the best portfolio in the market, more passive income, lower risk, and very attractive to Australian security holders. So I think that separation makes sense. There was some argument about the terms, whether the Westfield Trust, Retail Trust security holders were paying too much for what they were getting. I actually think it's within the ballpark of reasonableness, and certainly the independent experts thought the terms were reasonable. So I think it's a much cleaner, simpler, better outcome, and it's the outcome that most of the Westfield Retail Trust security holders wanted. Those who didn't had quite legitimate reasons for saying they liked the status quo. They were UniSuper and Colonial fundamentally, who UniSuper's got a defined benefit fund in amongst the larger fund, and for them, passive income, CPI protected income generally, at below asset backing, that's hard to find. And so you can understand why they thought they'd like to keep Westfield Retail Trust as it is.
So what does this also do for the reputation of the Lowy family? Because there was some concerns about Frank Lowy and whether this might be damaging to his chairmanship of the company. Where do they stand?
I think it damages his chairmanship. But certainly, Frank's had this astonishing career, this astonishing history, very few setbacks, and that was embarrassing more than anything else that he almost failed to get this across the line. And it would have failed if they hadn't gone out in the last 2 weeks and drummed up a lot more support. I think something like 100 million more securities were voted today than were voted at the original meeting. Something like 12,000 security holders who didn't vote at the previous meeting voted today. And that campaign they ran, including ads in the papers and certainly a fairly intense campaign of ringing brokers and investment bankers, clearly was the difference between success and failure today. But the fact that it would have gone down at the earlier meeting is an embarrassment to him.
And now that's been relieved.
You can't expunge history, so people will remember how close he got to failing to convince people that this was a good idea. But at the end of the day, he's still there. He'll still be chairman. Westfield Development will go off and do its thing overseas, and that's where the Lowys have their main exposure, as opposed to the Australasian businesses. So yeah, it's a blemish on an otherwise pretty powerful record.
Now, given that international part of the business is freed up, I mean, could we hope that there's Westfield becomes the sort of premier international development company for retail?
Look, it's already up there in the top 4 or 5 international property businesses. Simon in the US is probably bigger. But certainly that portfolio that they've got and the development pipeline they've got ranks them up there in the top handful of property companies in the world. I think the interesting question is, once they're freed up and once they are purely an international business, why would they be domiciled here? So I think there's some possibility, maybe even a probability that somewhere down the track we'll see that business, the Westfield Group business, headquartered in New York as opposed to Sydney. So I think that's potentially the downside for the Australian market, that setting them free might actually set them truly free.
Absolutely. Stephen Bartholomeus, thanks very much.
Thanks, Jackson.